The market is all over the place. Some stocks are blasting to the upside, like Alibaba, DraftKings, Roblox, and a lot more. And there's just a lot of opportunity in the market right now for both trades to the upside and the downside. So in this video, I'm going to cover my 4 favorite setups for the next couple of weeks. And with the first one, we have Alibaba. So this company has been all over the place over the past couple of years. It has fell a ton over the past year, especially as one, the market has basically crashed and there's been a ton of fear and uncertainty related to Chinese stocks. Alibaba is from China. They are a powerhouse in China, and they're just a volatile company, and they're actually pretty good fundamentally speaking, and they are extremely volatile, and this basically provides a ton of opportunity for short-term trading. We can see that Alibaba is up 11% today alone. You can compare that to stocks like Apple, which is down 0.24%, or Microsoft, which is down 0.4%, or even some of the other growth stocks like maybe Netflix, which is up 2.5%. Alibaba is just a stock that's very volatile, both to the upside and the downside, and lately there has been a bunch of positive upwards momentum with it, and there are a couple of reasons for this. One is that it has been extremely oversold to begin with, but there's also been a couple good news articles related to China lately, with them kind of wrapping up their investigation in Didi and them approving more video games, which, long story short, it's just good to see the Chinese government kind of winding back their regulations on their own companies, and the market loves it. So either way, looking at Alibaba stock, in October of 2020, Alibaba stock was at $319 each. Right now it's at $115 each, or $116 each. It was at lows of like $80 a couple weeks ago, but even though it's popping up a lot right now, it's still relatively low. So looking at Alibaba, there are a couple major levels to watch out for. With the first one, we have support at $100. If Alibaba goes back to $100, there's been a lot of buying pressure at this level in the past, so keep an eye on it. Buyers should scoop in around that level. There's also gigantic support around $90 and $80 to $81. Keep those 3 levels on your watch, or on your radar, we can say. In terms of resistance, watch out for 120, 130, and then right around 138 to 140. Those 3 ranges are going to be very important over the next couple weeks. Historically, there's been a lot of selling pressure at those levels, and it's just important to keep in mind because sellers will probably come in at those levels in the future. Looking at Alibaba stock, it has been making higher lows, which is awesome to see. We can see the first low was right here around $72.20 on March 15th. The next couple of lows were around $83. Yeah, you can see right around $83. That's a pretty nice increase. The next low might be around, maybe 100 or 105 or something like that. But higher lows is a very bullish pattern. So keep that in mind. Either way, Alibaba is a very volatile stock. It's going to move in some crazy ways. And there will be a lot of opportunity with this one over the next couple of weeks, both to the upside and the downside. Right now, it has a bunch of positive momentum. I love to see it. And over the next couple of weeks and the next couple of months, I'm expecting it to go up more. That does not mean it's going to rise tomorrow or anything like that. But it has a lot of positive momentum right now, and implied volatility is increasing, which means the market is expecting it to continue to be more volatile in the future. Keep Alibaba on your watch list. With the next one, we have SE. This is like an internet giant in Singapore. This company has gotten beaten down significantly over the past year. So in 2018, they were trading for around $10 each. In October of 2021, they went to highs of $372.70 each. Right now, they're right around $88.26 each. They had lows of right around $54 each. $54 a share. That's crazy. But right now, like I said, they're back to 88. $100 is going to be a giant level in the future with this one. It's a giant resistance. There's also resistance right around 135 to 136 and resistance right around 175. Keep those 3 levels on your watch list. They're going to be important. their big resistance levels. Looking at support, we have support right around $54 a share and $75 per share. Historically, buyers have came in at those levels, so keep them on your watch list. One other thing I wanted to point out is that SE is also making higher lows. We can see the original low was right around $54 each. The next low came in right around $70 each. And then it looks like the next low is coming in right around like $79 to $80 each. Again, very bullish pattern, ascending trend line right there. You could say a little bit of resistance right around $90 if you wanted to. So you could say this is an ascending triangle if you wanted to, but either way, lots of resistance overhead, but there is potential for this one. It's a volatile mover, like I said. Over the past couple of years, it went from lows of 10 all the way up to highs of 372. And just over the past year or so, it fell from 372 all the way down to lows of like 55. That is insane. So I'm definitely looking at this one for potential play to the upside over the next couple of weeks. So yeah, keep it on your radar. And then with the next one, we have SWBI. SWBI, Smith & Wesson. This is a gun company. They're trading at a pretty fair valuation, in my opinion. Here's the thing with gun stocks. Whenever there's a lot of fear of, new regulations going into place with guns or anything like that, people load up on guns, ammo, in whichever parts might be banned, because once they're banned, they're banned. So basically, whenever there's any fear with, increased gun control or gun regulation or anything like that, normally we see RGR, which is Ruger, and then SWBI, which is Smith & Wesson, pop up. Basically, this is a play on, if you think everyone's going to freak out with more gun control being put into place. So keep it on your radar. SWBI is bouncing off of a giant support right around $13.30 and $15. In terms of resistance, we have it right around $19 and $20 a share. It has potential to run. In the past, it has popped up quite a bit. Like we can see a lot of times it just does nothing, but it goes on like these couple week to couple month long insane uptrends. Like we can see, let's say in June of 2021, it went from $19.55 all the way up to $39.61 over like the course of like 3 weeks or so. When it moves, it moves. So keep it on your radar. And there have been many other instances in the past where it just blasts up. So keep it on your radar. I know, unfortunately, there have been a lot of shootings lately and a lot of violence related to guns. So keep it on your radar. Now with the last one, we have Redfin. Good old Redfin. This company's crazy. Over the past couple years, they went from lows of around, you could say, $9.63 all the way up to highs of $98.45. They fell all the way back down to $8.65. So the past couple of years have been insane for this company. They've been growing at a pretty good pace. Redfin is bouncing off of a gigantic support right around $10 a share. This support is giant. So I'm definitely expecting a bounce up off of this. The next major resistance is kind of far away, which is a good thing. The next major resistance is at $20 a share and $16 a share. So considering right now it's right around 11, it's like there's a good amount of potential for, pop back up. So keep it on your radar. Looking at some of the intraday chart data. Again, it's making higher lows. This is a bullish sign. Support right around 850 or a low right around 850. Then it went all the way up to right around like $9.30 and then $9.60 and $10.50. So keep it on your radar. These four stocks, I see potential with them over the next couple of weeks. Just one thing to keep in mind is that the market overall will have a giant influence on basically all stocks and just sentiment overall. So as long as the market is holding up, these setups look awesome in my opinion. Now here's the thing, like let's say the inflation data, or like let's say when the inflation data comes out, or any economic data, or any major news events, if that causes a giant sell-off in the market, you probably don't want to be trading short-term stock or options plays to the upside. So it's like these 4 setups that I shared today look awesome in my opinion, but you have to be mindful of what the overall market's doing. So if it's getting destroyed and everyone's panicking like there's a horrible catalyst that comes out, you don't want to be in these setups. But if the market holds up, it stays steady, and maybe we get a little bit of good news, that can be absolutely amazing for these plays. So they look awesome. Just be mindful of the overall market. The last thing I want to say is if you're not in the Stocked Up Discord, join up. It's free. And if you want to get a little bit more serious with your short-term trading, check out that first link in the description and the comments down below. We actually had our bot today spamming Alibaba 22 minutes after market open. Alibaba stock just skyrocketed today, and it was calling out calls very, very close to open. So if you're looking for daily options, day trades, swing trades, custom bots, an amazing community, check out that first link in the description and the comments down below. Our bots are awesome. You won't find them anywhere else. We can see it calling out a bunch of plays to the upside today before a lot of them even popped up. So check it out. First link in the description and the comments down below. Besides that, let's have an amazing rest of the week.